Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. This week, we're looking at a market caught between rising oil prices, geopolitical tensions heating up, and the peso falling to 56.22. We'll also dive into Jollibee's new acquisition, which could be huge for them, an amended environmental compliance certificate that will benefit SCC, and the growing risks behind e-gaming stars Plus and Blue. First, let's look at our market overview. The PSEi extended its gains for the second straight week, up 0.3%, closing at 6,395.59. Market breadth was positive again with 116 gainers versus 77 losers, but foreign investors flipped back to net sellers, dumping 112.1 million pesos worth of local stocks. Now, what drove the week? U.S. and global equities initially enjoyed strong momentum from optimism on U.S.-China trade talks and slowing inflation as evidenced by the lower-than-expected CPI and PPI for May. But by Friday, all that changed when Iran launched missiles at Israel, which sent oil prices up by 7% in a day. Gold and the U.S. dollar jumped too as investors rushed to safety. By the end of Friday, the S&P 500 and the Nasdaq were lower by 0.4% and 0.6%, erasing early week gains. And yes, this affected us too as the peso weakened past 56 pesos after staying in the 55 peso level the whole of May. All eyes are on the Fed as it meets on Tuesday to Wednesday, where no rate change is expected. Investors will also be curious to see whether the Fed will focus on the soft May inflation print or the recent spike in oil prices in determining its next interest rate move. Here at home, the BSP will meet on Thursday, where a rate cut of 25 basis points to 5.25% is the market consensus. However, the Fed statement will also influence how the BSP will move going forward. Although economists are anticipating the BSP to cut rates by another 25 basis points sometime later this year, this might not happen if the Fed remains hawkish because of rising oil prices and stays on hold. It will also be interesting to see whether gold and oil will continue to go up this week and if the peso will continue to depreciate because of the ongoing Israel-Iran conflict. Let's talk about some local news. The wage hike bill we mentioned last week is officially dead. On June 4, the House of Representatives approved a 200 peso minimum wage increase, but Senate refused to meet in BICAM session before Congress adjourned, killing all hopes for the bill. The non-passage of the wage hike bill would reduce economic uncertainty. As discussed last week, NEDA warned that even at just 100 peso, the wage hike could push inflation up by 0.2 to 0.8 percentage points and cut GDP growth by 0.1 to 0.5 percentage points. Although hopes for a significant increase in the minimum wage is now dead, workers may still enjoy wage adjustments as the regional tripartite wages and productivity boards are still allowed to implement wage increases. Now shifting to sentiment, the Consumer Expectations Survey is a regular survey conducted by the BSP to gauge the sentiment of Filipino consumers about the economy. It asks consumers how they feel about the economy, their household finances, and their intentions of buying big-ticket items like appliances, cars, and houses. Unfortunately, the recent survey showed that the overall consumer confidence index declined again to negative 13% in the first quarter of 2025 after recovering the past two quarters. The heightened pessimism among consumers was mainly due to their concern over the faster increase in the prices of goods and services, lower household income, and fewer available jobs. Consumer sentiment for the next quarter has also turned more pessimistic with a confidence index of negative 0.5%, down from 4.2% and 2.7% the past two quarters. Deteriorating consumer confidence could hurt consumer spending, which already showed signs of recovery in the fourth quarter of 2024. This is another reason why the BSP should cut rates during its next meeting. Despite the not so good news, we have 4 stocks that might excite you. Let's start with Jollibee. Reports confirm that Jollibee is signing to acquire 100% of South Korea's Norang Tongdak, a top 5 fried chicken chain with 700 franchise stores. The deal is estimated at 5.7 to 6.6 billion pesos and is expected to be earnings accretive, adding 1.6% to revenues and 4.1% to net income. Valuation-wise, the deal was made at a forward PE ratio of 13.6 to 15.5 times, a discount compared to Jollibee's own 25.1 times PE. So it seems like a good acquisition. The latest acquisition will support Jollibee's efforts to expand in other Asian markets and strengthen its presence in South Korea. Next, we have SEC. The Department of Environment and Natural Resources has granted it an amended Environmental Compliance Certificate or ECC for the expansion of its coal mining operation, increasing its coal operation area to 5,221 hectares from 4,269 hectares previously, and its annual production limit to 20 million metric tons from 16 million metric tons from 2025 to 2027. This development bodes well for SEC's coal mining operation as the new annual production limit indicates a potential 25% increase in coal production volume from 2025 to 2027. Higher production volume could help offset the negative impact of lower coal and spot market electricity prices on profitability this year. Now let's talk about the hottest names on the board, Plus and Bloom. Plus has surged 74% since end March thanks to blowout 2024 and first quarter earnings and a likely PSEi index inclusion in August. Bloom has more than doubled during the same period, driven by its new online platform Mega Fanalo as the company pivots to e-gaming. Last week alone, the stock jumped by 23.6% because of the launch of the platform. But from just 40 license holders in the fourth quarter of 2024, there are now 60 with more probably to come. Because of this, Plus may struggle to sustain growth, while Bloom may remain unprofitable in 2025, especially with its huge 2 to 4 billion peso marketing spend. Then there's regulatory risk. The BSP is mulling a ban on banks and e-wallets promoting gambling platforms. If enacted, this would hit e-gaming hard. 60% of Plus customers' top-ups go through e-wallets like GCash and PayMaya. Plus is also no longer cheap as it trades at 15.4 times 2025 PE. On the other hand, Bloom is at risk of being removed from the PSEi index in the August rebalancing as its market cap has dropped to 71 billion pesos. Stocks that are removed from the index usually suffer from a steep sell-off from fund managers that track the index. So if you hold Plus or Bloom, now's the time to consider taking some profits by selling at least some of your holdings. On top of those four stocks, prices of gold miners Apex, Philex, and OGP jumped last Friday in response to rising gold prices. ASEN also rallied strongly, making it one of the best performing stocks for the week, as renewable energy companies are expected to be major beneficiaries of rising oil prices. FPH is expected to be one of the major beneficiaries of the sale of FGen's 60% stake in its gas platform for 50 billion pesos, being the parent company of FGen. FPH is also very cheap as it is trading at only 3.4 times PE and 0.3 times price to book value. A continuous weakness of the peso would hurt companies that are heavily dependent on imports, such as GTCap. It would also hurt airlines such as SEB, which are also negatively affected by rising oil prices. Generally, a weak peso has not been good for Philippine stocks as it increases forex risk for foreign investors, which account for half of our trading volume. As such, the exchange rate is something that we will be closely monitoring the next few weeks. That's all for this week. If you found this market rundown helpful, don't forget to like, subscribe, and hit the bell so you're first to know what's moving the market. I'm April Tan. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.